Hey everyone. Today I'm excited to dive deep into one of the most influential investment books ever written, The Intelligent Investor by Benjamin Graham. As Warren Buffett's mentor and the father of value investing, Graham's timeless wisdom has helped countless investors build lasting wealth through smart, disciplined investing. At its core, intelligent investing isn't about having a genius IQ or following complex trading strategies. It's about developing the right mindset and following proven principles that help you make rational decisions regardless of market conditions. Graham's approach centers on value investing, buying quality companies when they're trading below their intrinsic value. One of Graham's most brilliant concepts is Mr. Market. Imagine the stock market as a business partner who shows up daily, offering to either buy your shares or sell you his. Some days Mr. Market is optimistic and quotes high prices, other days he's pessimistic and quotes low prices. The intelligent investor takes advantage of these mood swings rather than being controlled by them. The margin of safety principle is crucial. Never pay full price for an investment. You want to buy stocks at a significant discount to their intrinsic value, giving yourself room for error. Think of it like buying a house worth $300,000 for only $200,000. That $100,000 difference provides your safety cushion. When it comes to portfolio strategy, Graham advocates keeping things simple with a mix of high-quality stocks and bonds. For most investors, he suggests a 50-50 split between stocks and bonds, adjusting based on market conditions. This provides stability while still allowing for growth potential. Graham emphasizes emotional discipline as critical for success. The biggest enemy of investment returns isn't the market, it's your own psychology. Fear and greed drive most investors to buy high and sell low. By focusing on business fundamentals rather than daily price movements, you can avoid this common pitfall. I've personally found Graham's teachings invaluable in developing my own investment approach. During market crashes, remembering the Mr. Market analogy helps me stay calm and look for opportunities rather than panic selling. The margin of safety principle has saved me from numerous potentially poor investments by keeping me disciplined about entry prices. Remember, successful investing isn't about getting rich quick. It's about consistently applying sound principles over the long term. Focus on preserving capital first, then growing it steadily through intelligent decisions. If you found this breakdown helpful, please hit that like button and subscribe to the channel for more investment insights. Drop a comment below, sharing which of Graham's principles resonates most with you. Don't forget to hit the notification bell to stay updated on future videos where we'll dive deeper into specific investment strategies. Until next time, invest intelligently and stay disciplined. Thanks for watching.